Djamchid Assadi ji. And I would like to start the session with the permission of our director, Dr. Ajay Kumar sir. So a
Yes,
very good,
please, please.
yeah. So very good afternoon to all and good morning to Dr. Djamchid Assadi ji. I am Arpana Kumari, Assistant Professor at GL Bajaj Institute of Management and Research. And on behalf of whole GL Bajaj fraternity, I feel highly delighted to extend a warm welcome to Dr. Djamchid Assadi ji from Burgundy College of Business, France. I also welcome Dr. Ajay Kumar sir, Director, GL Bajaj Institute of Management and Research, faculty members, and dear students to today's webinar under Global Talk Series on Technological and Social Innovation for the Financial Inclusion from and to post-COVID-19 crisis. So we at GL Bajaj Institute of Management and Research feel highly privileged while organizing this webinar. So speaking on a quick intro of GLBIMR, would like to share that the Institute under able guidance of Shri Pankaj Agarwal ji, Vice Chairman, GL Bajaj Educational Institutions, offers 2-year full-time postgraduate diploma in management with an objective to make the student the best management professionals. Recently, the institute was conferred with a certificate of merit for outstanding contribution in the field of education by Competition Success Review. Also, we have been ranked 50th Best Business School in India by Education World India Private B School Ranking 2020-21. Today's webinar is organized with an objective to appraise the students with the technological and social development tools that are leading to higher financial inclusion. In addition to that, we also look forward to understand the impact of COVID-19 on financial sector and economy. As we know, COVID-19 crisis is putting unprecedented strain on markets, government, business, and individuals. So this webinar intends to explore how the technology, innovations, and financial infrastructure that emerged in past can be leveraged to overcome the immediate challenges presented by the pandemic and manage the impending economic fallout. So we look forward to Professor Assadi ji to understand his perspective in this area. Before that, with permission, I would like to give brief introduction of Dr. Djamchid Assadi. Dr. Djamchid Assadi ji is higher education professor and researcher at Group Burgundy School of Business, France. He authored several books and published many professional articles in English and French. He is also a member of several editorial boards, publishing journal in English and French. Djamchid Assadi ji has delivered many lectures on corporate and marketing strategies, in particular applied to cyberspace. He often accomplished consulting missions. We once again extend a very heartfelt greetings to Professor Djamchid Assadi ji and would like to say huge thanks for taking out time to join us today. We also have amongst us Dr. Ajay Kumar sir, Director, GL Bajaj Institute of Management and Research. Sir has experience of more than 32 years in academic research, training, and consultancy. With his remarkable ideas and actions toward academic excellence, he always motivates people around him. Sir has conducted more than 600 seminars, conferences, and webinars. During this pandemic COVID-19, he is an active member for social well-being and took many initiatives for helping out unprivileged category of our society. Recently, his outstanding dedication and service to the society and fight against COVID-19 was acknowledged by Newspaper Association of India and the Scouts Guides organization. I would now like to invite our director, Dr. Ajay Kumar sir, for the welcome address. Please, sir.
Good morning, Professor Assadi, and good afternoon to everyone, all the participants, faculty members, and students. Today, we are having a webinar wherein Professor Assadi will be deliberating on the subject in the light of this COVID, the impact on financial institutions, and the future of the financial institutions specifically, and the conditions of the financial status of different firms, different industries under COVID-19. All of you know that financial institutions are the backbone of any economy. Their robustness, agility, and depth are critical feeders for economic growth. Empirically, financial services typically grow between 1.3 to 1.5% of GDP growth across economies. However, the Indian financial ecosystem has had a challenge of trust and perception, which has got exacerbated over the past few years. The impact of coronavirus pandemic on the global economy is likely to be significant and widespread, given that nearly half the global population, or more than half you can say, have witnessed lockdown, and still the social distancing norms are being followed, though companies have started operating across the globe, but slowdown is still there. Various research houses have predicted global growth between 0 to 0.5%. India too will be significantly impacted. GDP growth in India may witness contraction in first quarter of 2021, and on an annual basis is likely to be around 1.5 to 2.5% for this fiscal. Governments and regulators across the globe have responded with fiscal and monetary responses to the current crisis. In India, the first of many likely fiscal responses was focused on supporting those in need on the basis of humanitarian ground. Monetary response from the RBI was focused on providing liquidity to the system and providing a moratorium on loan servicing. The RBI action has ensured that there is a comfortable system liquidity and borrowing costs continue to be low. Government action of cutting deposit rates on saving scheme like PPF and post office deposits is targeted to ensure better transmission of lower rates. Nonetheless, India is likely to have a slippage in its fiscal deficit from its budgeted target of about 1.25 to 1.5% due to higher spending and lower GDP growth. All of you know that because of this pandemic, not only India, but entire globe has witnessed slowdown. If we talk about US too, it has seen one of the hardest days and years in the last 20-25 years, you can say. If we talk about Europe, if we talk about other countries, Asian countries, entire globe is passing through a phase of complete loss in businesses and economic slowdown. Under such circumstances, it's very pertinent to have discussion and deliberations with a hope of re-establishment of the growth patterns, with a hope that things will improve, with a hope that economy will again get accelerated. This discussion has been planned, and I believe that Professor Assadi, being an expert in this area, in the area of finance, will be able to deliberate in a better way and will definitely be a session benefiting to all participants. Thank you very much.
Yeah, thank you so much, sir, for sharing your valuable insights. Definitely, very deliberately, we have chosen this topic to get an expert view from Dr. Assadi. So before I move forward, I would like to inform you all that if in case we get disconnected in between of the session, you all need to join us back by using the same link that we used to join the meeting. So it's a request, please join us back in case we get disconnected. Now I would request Professor Assadi ji to please start the session. So over to you, Dr. Assadi ji.
Now, I would appreciate if you kindly allow me to share my screen. It's written on my screen that I have to be authorized.
Yeah, sure.
Done, sir.
I would request,
It's done, sir.
Saurabh, sir, please. Okay,
Yeah,
it's
it has
done,
been
sir.
done. You can start.
Okay. People, once more, I hope you are having my PowerPoint.
Yes, sir.
Yes,
Yeah,
it's
okay.
visible.
Once more, I thank you for inviting me, for having me, and for being here. I'm familiar to Bajaj Institute. You know, I am honored to be. I would appreciate if people can turn off their micro. If you do not use it, I would appreciate if you. Yeah. Yeah, people, you are more than welcome to participate, to intervene, to ask questions, to exchange with me anytime. The presentation is for that. But it's going to be a bit disturbing if I have sounds, voices, and I cannot concentrate. I would appreciate if the lady who is managing the session can fix it up.
Please.
Saurabh sir,
I
आप
would
कर दीजिए.
request,
Saurabh sir.
all the students to please mute yourself, and would request Saurabh sir as well to please mute all the participants and just unmute the speaker.
Is that okay?
Yeah, please go ahead.
Okay,
Sir.
thank you. Thank you very much. So very fast, this is really an honor for me. I consider myself as a partner of Bajaj Institute. It's really a pleasure continuing collaborating with you. We are already collaborating on publications, and I'm honored to have Dr. Kumar at the conference, European conference on sharing economy that I monitor and I oversee. I take this opportunity to state my wish to continue working with the students, because several times I have given lecture at your institutions, and the enthusiasm and motivations of young students I have met was very motivating, so that I felt fresher after my lecture than before. So that would be a very good experience to continue. My lecture is on, I have worked a lot on finance, but my expertise is not finance as you can imagine, not the market finance, not corporate finance. So how come that I have written a lot, published a lot, managed many conferences on finance, if my expertise is not market finance, is not a corporate finance? Because what I work on is financial inclusion. If you ask me in just one word, well, it's just one act, what I'm working on, my interest in research is how people can get involved, engaged, integrated into exchange. I do not define personally the poor as the one who do not have. This is not my way of looking at them. So how do I look at them? I say they are excluded from the exchange process, and we should do in a way that they get included. This one is very important for two reasons, and then I start my talk. First, if you consider a poor as the one who does not have means, so the very fast, quick solution is get money from the rich and give it to the poor. We know that by historical experiences that there is no solution, there is no good, it does not change. In the best case, if you might call it best, the rich get poor, and the poor after a while will lose his, her money and cannot continue. The second reason I look in this way, the poor is the one who is excluded, is that then, and this is all my talk about, is the people initiative. The solution is going to be people. The solution is not going to be a government. The solution is not going to be a think tank. The solution is not going to be somebody who knows and very kindly, because he's very kind, to help the poor. The solution is that we give the opportunity, make it easy for the poor to get involved in the exchange, and then on their own, they get rid of poverty. And this is a bit my talking. But let me start by having a look on this crisis. Well, we have had many lockdowns. I am wondering if this is the case in India too, but in Europe, they are starting to ease lockdowns. From next week on, next Monday, almost everything is normal in France. Almost everything, but people mentality. You can officially remove the lockdowns, but they are big problems that you cannot do a fight for them. You cannot commend them. We have a kind of recession. Unemployment is huge. And what is the most frightening for me is the public debt. The public debt has not been, during the peace in Europe, in the world, as big as it is now. How the governments are going to finance that debt? If they put fiat money, you have inflation. If they put taxes, you are less motivated to work. This is a huge one. What are the solutions though? You have mainly two solutions. And only two solutions. More or less, you have two big ends in economy. One says, well, let's have a very good government, a very good central power. And then we ask that government to fix the things. So the concept of their idea is that the one who saves us is the government. If they have any difference, any disagreement, is not on that central power, but one said a good government is nationalist, the other one is the socialist, the other one is whatever, but the idea is the government is the savior. The second one says that, well, the solution is people, and people is in an economy is a capitalist system, market. And the market should find the solutions. The crisis we had showed us something for those who wanted to understand and see, is that people can fix it. Many different solutions came about by people. That was the market. That was democracy. That was no central power. People decided to help each other. People decided to work as they could. People decided to, that was the case. Every night at 8 p.m., we used to go to our windows and to clap for different workers, and especially health workers working during that crisis. That was all popular initiatives. And it was efficient. This is number one. That was spontaneous. That was instantaneous. That was automatic by people. So they can do it. And number two, we have also the historic record of centralized economy. And if you compare, you see that considering rate of growth, considering income per capita, well, the free market is much better. So my thing is the following: for the post-COVID-19, if the historical record tells us that market economy is more efficient, number one, if the experiences, popular experiences, spontaneous order that people resorted to during the crisis, so why should we change the cap? Why we should not continue trusting, believing in people? You know, you have mainly two ways of believing people, and only two. One is that people are fantastic, so I think instead of them for them. Number two, the second solution says, well, if people are fantastic, let them freely work and they can find solutions. The ideas I'm developing here now is that the experience of popular initiatives during the post-COVID, during the COVID crisis, we should take them into account and continue working with them. So reset capitalist solution. I prefer to call it a market-based economy, but well, because you might be more familiar with capitalist system, I call it, but I prefer to call it market-based economy. I come back on it later because you need to get familiar with some ideas and then I come back to it. Okay, why people get excluded from the financial services? India is a big, huge case in it. Normally, you have two reasons, two routes of being financially excluded. One is voluntary. I do not want to have an account. Why? I do not need. My father does, my mother does, my brother does, my sister does, my wife does, and I don't need. If I need money, you know, I do not need for any reason. Second reason is that culturally, religiously, I do not work with the banks. They give me interest, they ask me interest, they work with my money in investments I do not like, so I do not go to the banks. I have indirect access, is rather, as I said, no need, as my wife does, why should I have one? I do have one, but I do not use it because I do not use it. So this is not for me, I do not use it. I mistrust financial institutions. And why I do not have any financial services? Because I do not know. What should I do? I should go there? Where is it? I should be well dressed up. Do they accept me? I have an accent from my village. Do they make fun of me? I do not know. Then you have involuntary exclusion. Involuntary exclusion is that I do not have enough money and the banks do not accept me. I'm not profitable for them. I have a high risk for them. they do not accept me because they do not work with low workers, with low peasants. Because the price is too high for me. They ask me favors for managing my account. It's very far. And they ask me a kind of contract that I cannot fulfill. For example, they asked me a salary contract. I do not have a salary contract. They asked me, well, if you do not have a salary contract, show me license of your business. Well, my business is that I work as I can. But I work hard, I have money, I can feed my family, but I do not have a license. So, as you can see on your left, you have demand-sided reasons of exclusion. And if you look on your right, you have supply-sided reasons of financial exclusion. That gives us 2 billion unbanked. Is much better than before because we had many more people unbanked. And well, this is the result, mainly women, the poorest by all means, and the youngest adult, because they are not yet established in the professional life. Look at this. This is India. You are having here. I was highly surprised, and if we have this, and I have a very charming voice. I'm hearing a very charming voice. As if you mind, I would appreciate if you explain to me later the difference between Pakistan and India. Important people who are very far from the banks. Well, and now the thing is that it's getting better more and more for different reasons that I will explain shortly. However, you see that there is still difference between men and women. Men in all cases are doing better. I do remember I had a fantastic experience once. I was in India for microfinance research, and a lady, I never forget, we had many different meetings for mainly ladies in microfinance from the very poor villages. And I do remember many different remarks. Two of them I never forget. Once, a lady was very happy with microfinance credit, and because she could develop her business. And I asked her, my colleague translated, I asked her, so what happened later? You're happy, you developed your business, and what's your feeling? What she said, I never forget. She didn't say I eat better. She didn't say I consume more. She said, now my husband respects me. Now I have my voice. That was very important. And the second one I never forget, that was in another village. That was a very young girl who said that, when I said that, well, what do you expect by microfinance? Because she had the credit for education. And she said that whenever I am in my village and I see airplanes, I wish to pilot them. And well, I have microfinance for that. So you see that ladies are still below, but they have big ambitions. We cannot see this movie because of time. It's a pity, but because we have only 20 minutes, I prefer to go a bit faster. And we do not, well, people, we do not, let's not do these things because of time. It's a pity, but some later probably we can work more on that. Now, Now I would like to share this with you. I would ask the president to ask people turn off their mic. Is disturbing. I cannot concentrate. Yeah, people, I would appreciate if you kindly turn off your mic. And whenever you want to talk, I would be more than happy to listen to you. But when I have voices, sounds like this, I cannot concentrate.
Saurabh sir, can you please mute all the participants apart from the Assadi ji?
Yeah, you know, because dear participants, it could be just one sound for you, but when you have 4 and 5 of them in my ears is disturbing. I try to do my best.
Yeah,
Because I still have those sounds. Yeah, I would appreciate if you pay attention to this one, because this is my theory. Look at the problematic, the inquiry, the question. Lady, it's really hard for me to concentrate. I have many different sound voices in my ears.
actually we have muted all the participants from our end. I think it's fine now.
Yeah.
Yeah.
Okay, do you hear me?
Yeah. Please continue.
Okay. Okay, thank you. So yeah, people, so I would appreciate if you can pay attention to this one, close attention to this one, because this is my response, this is my theory. Do remember the research inquiry. The research inquiry is that if we need a popular solution, a democratic solution, a market-based solution to solve the problem of financial exclusion, what should we do? If the experience during the crisis, corona crisis, shows that the popular initiatives are very efficient, so what can we do, therefore, solving the problem of financial exclusion? I would appreciate if you come with me step by step. Well, we have excluded people. Very often, the poor and the working poor is the one who gets badly into the trap if only for one day he cannot work because he's sick, because whatever. And the poor is the one who does not have enough money to satisfy his or her needs. What happens? They are excluded by financial services. Why? Well, because the return on investment is very low. The banks prefer to engage an employee for a rich client, which a much higher return on investment than to a poor one. And there is risk also by insolvency. You might say that the rich also might run this risk. Yes, but the difference is that if you are rich and you do not pay back your loans, they can seize your house, they can seize your car, they can seize many different things. But the poor do not have them. And even if they do, morally, you don't feel good, you know, just to seize and confiscate probably their dishes, their clothes, and whatever. So they are unbanked. They are unbanked, but still they need financial transactions. They are humans, they live. They have two options. Give me money, charity. I need money. Number two, I go to money lenders. And you know that they are shark. It's very, very difficult for them. So there is a third solution. I need badly money. My children need money. They are sick. They won't go to a school. And well, probably the only thing that I can do is illegal sources. So you see, the circle continues. This is a vicious circle. There is another solution for the unbanked you can do. Imagine that if by technological innovations and social innovations, I can reduce the costs of transactions so that the return on investment is not low, is positive, is positive. If I can do that, give me an example. Well, for social innovation, you have, for example, group lending. You have social collateral. People, you make sure that you have more than 96% of people in microfinance who return their loans. Why? Well, because they are overseen, they are under control of their neighbors, their relatives, and they do not want to lose a face. The other solution is with digital technologies, you decrease a lot cost of transactions. Sometimes it does not cost. I do remember once more in India, I work on technologies, just have a look on Google, you see many different articles, books I have written on technologies. But once in India, in poor villages we were visiting, I saw the poor people sending money, receiving money on their phones, and I was just like a kid in front of them. They could do it much easier, much faster, much better than I could have imagined for myself. Well, they use it because they need it, and it does not cost to the financial institutions, and mainly that was telecommunications companies who launched that because it didn't cost anything. So what happened? Now, and this is what I'm looking for. Now the pools are included, are reinserted in exchanges, not because you have pity for them, not because you are so nice, not because you are so good, not because you say that if I do this, then God gives me more back. No, because they are exchange partners, like other exchange partners. Now, because they are profitable for them. And then you start doing this. And then you have one more time, this is, you see, I'm very consistent within my theory. I do not say poor, rich, I'm saying excluded, included. If you want to help the poor, don't give, in my opinion, I do not have anything against charity, but it does not solve the problem. We are economists. Do them in a way that they get involved in exchanges, and then they can get rid of them. This is Janus of financial inclusions. You know that Janus was a Greek god having two faces. Being able to see at the same time, now we say in English, fish eye, at the same time on your right, on your left, on your front, on your behind. So if you want to have included people, go from vicious circle, being nice we have done up to now. We have good experiences, and we continue to. This is the number of people in poverty. We continue to reduce them. The only thing I'm worried about is that after the COVID-19, we get back to very old habits. Because that was a crisis, we say that with a crisis, now government do something for us. But you have a fabulous Indian Nobel laureate who said that in democracy, people never get hungry badly. Why? Well, because they know. How come that when I know I do not get hungry? Because I found solutions. I'm not saying that I go to a very good restaurant, I cannot do that. But when I know that there is a shortcoming of food, then I try to find the solution. Now imagine that the responsible is government. And the government does not want to say that, well, the shortcoming is my fault because I was responsible, in charge of, so the government does not inform the citizens, and suddenly the citizens find it out. This is number two. One more time you are having. It decreases all the time, you see. What is unequal? You are not having this in the same way in different countries. That solutions, you know, I put away my diploma, I put away my education, and I asked the government, wake up. You're having a very good education. Find me the solution. The solution is in you and not in government. Government should only support you. Well, if you believe that the solution is the government, you are not in a good school. Your school, management sciences, economic, is the school of people, is the school of market, is the school that we can handle it, we can manage it. These are books that I have contributed to. That was Avindashta is my Indian colleague, lives here. I have had this once more, this is him. This is the one that I have coordinated. There are many different things, people. I stop here to have, if possible, a discussion. We lost a bit time because of technological problems. Yes, I advocate technological innovation, but technologies, sometimes they make fun of us, as they did today, right now with me. I thank you very much for your attention. I'm all ears.
Yeah. So thank you so much, Dr. Assadi ji, for sharing your views and such a wonderful presentation you have brought, and very elaborately you talked about a lot of areas of financial inclusion. So I would like to take a few questions that our students have. They would like to understand. First question is about, what's the role of fintech startups in provoking industry-wide change?
Would you please develop the question a bit more? I didn't get it.
Yeah, so this is one of the questions that a student wants to understand, that role of fintech startups. A lot of startups are coming ahead with financial technologies. So what are their role and how they can provoke the industry? They can impact the industry, financial industries.
To put it very simply, very simply, I would say that innovations are efficient in economy, in management sciences, when and only when they reduce transaction costs. And digital technologies reduce considerably transaction costs of financial transactions in two ways. Number one, by removing almost the cost of routine operations. And number two, you know that transaction costs are not only monetary costs, they are monetary and subjective costs. I do not proceed to a transaction not because I do not have money, because I do not know if you are a reliable partner. This is a cost. Non-monetary, but this is a cost. So innovations reduce monetary costs and non-monetary costs. For example, a crowdfunding platform says all people who have profiles on my platform, I have checked, they are reliable. And if there is any cheating, I have an insurance. So it reduces a lot cost for me. So I hope I'm answering correctly to your question, is that the role of technologies is to reduce transaction costs, monetary costs and non-monetary costs.
Okay. So
the same for social innovations.
Yeah. Yeah. Are you continuing, sir? Should I start with the next
Please
question?
do. Please be so kind.
Yeah. Yeah. So the next question is regarding that we all have seen that government is doing more, government is spending more, and we are unable to gather revenue right now due to this crisis. So how do you see in a larger perspective its effect post for COVID-19 on the whole industry, on the whole globe in a larger aspect?
If I were government, I would have encouraged financial sector to get involved more in financing loans to the poor. When the government is involved, is a big bureaucracy. I'm not against it, please do understand it, but this is my first option. When government gets involved, is a huge bureaucracy. And very often you have a rent behind. Who gets money? Who gets money? Who checks? Sometimes you have some kind of rents in here. And who pays the cost of it? If the cost of loan, people think of it, probably I'm not correctly understand, probably your research make me understand. But if the state loan is cheaper, who pays for that? Who pays for that? And we should have a research, a comparative analysis to see that, well, probably the one who pays, you don't care about him, you care about the poor for any reason. But if you consider that all people are citizens and the national economy is the national economy, if you get money from somewhere and to give it to some other people, I'm not against it, one more time. I'm not against it. If you think that the government has money to distribute to people, well, I think it's not useful, but it does not bother me. Anyway, this is not my solution because I'm an economist. Economist is that whatever you do, people, whatever you do, you should ask, do I have a return on investment or not? If you do not have a return on investment, it means that you are wasting your resources. You might say, a few days ago, we wasted resources right here in front of this camera. Why? Well, that was my birthday, June 13. And the people gave me gifts. There is no return on investment for them. And we had foods, and we didn't charge guests for that one. What I'm trying to say, I'm not saying that everything is economy. Sometimes you give something and you do not expect anything in return. But when you are graduating from a management school and when you get salary as a manager, when you are analyzing as an economist, as a manager, this is a rule. What is the return on investment? I'm not saying play always cricket, but when you play cricket, there is a rule. When you play football, there is another rule.
Perfect. Yes. So another question is regarding people have somewhere lost their trust on anything, and they are very scared right now for going for the investment, availing financial services. So what's your perspective on rebuilding the trust of people so that they can again start availing the financial services and their insecurity can be removed?
The history tells us that, well, at least for digital technology, the history tells us that the social innovation of people trusting each other, trust in two senses, trust that we have a trust, we have a box, we put money in it, and this is our trust, and we trust each other to work together. This by social innovations. Social innovations predated digital technologies, many other technologies too. Yes, I totally trust you. You have social collateral, which is a new way of a social way, social innovation, makes that people trust each other, and they get the amount of money they couldn't have individually. They have 10 times more money that they share because other people contribute to it, and when this is your turn, you have that money, and then some later you give it back. That was a social innovation. I really believe people.
Yeah, thank you so much, Dr. Assadi ji, for sharing your valuable insight and taking all the questions and answering them so nicely. So to just sum up, what we discussed today was regarding the gender gap in account ownership, and very elaborately you talked about the framework of financial inclusion for including all the maximum to maximum people in the financial services. Also, you talked about progressive road that you explained for financial inclusion, considering securing account to receive and hold funds. So thank you so much once again. Indeed, it was a wonderful session, and you gave your time, you spared your time, and shared your insights on the topic. So on behalf of entire GLBMR family, I would like to express my gratitude to Dr. Djamchid Assadi ji for sparing his valuable time and sharing immense knowledge with us and motivating our students. I would now request Director Sir to share his views on the session so that we can find out it.
I thank you very much for trusting me. I thank you very much, Dr. Kumar, for trusting me. That was really a great pleasure for me. I wish we had more time to talk and to exchange. Is always very motivating for me. You young people, I'm available. You can send me if I can answer to any short questions. That would be a pleasure for me. My very last word is that what we did today, that was a P2P initiative. I hope you liked it.
Thank you so much, sir. I would request Director Sir if you would like to say something about today's session.
Sir, would request you to unmute yourself.
Yeah.
I'm sorry,
yeah, now I think everyone is getting my voice.
Yes.
So my sincere thanks to Professor Assadi. It was a wonderful session, and I too learned a lot from the deliberations which you made on with this different aspect, and I believe that the students must have enjoyed your session, and all faculty members must have benefited with your session. Such type of session, you rightly said that it's required on regular basis, rather more frequently, by the experts from different fields. And I believe that today you could not complete the entire preparations which you wanted to deliberate to all these students. So in near future, again, I will be requesting you to have further one more interaction with the students, faculty members, and I believe that you will be by giving your consent. Thank you very much, Professor.